Hey guys, welcome back to another video by Fully Informed Trade, or FI Trade for short knowledge for everyone. My name is Alex Cho, and today I'm just going to talk about the US dollar index, basically the dollar against a basket of currencies. And right now the US dollar index has had a pretty consistent uptrend as far as I can tell. And basically, if personally, at least the way I see it, is that the dollar index right here, it's currently trading at around $82 and 09 cents. It did pull back just slightly on the session, but not by much. So again, overall, I'm still anticipating a stronger uptrend in the value of the equity. Not really the equity, but the currency overall. Main reason is because everybody's anticipating a Greece exit. And the thing about Greece is that Germany doesn't really have enough money to bail out all of the member states that are having financial issues. What they would have to do is inflate the value of the euro. And at the end of the day, whether it's a lack of confidence or inflation, it's still going to cause the value of the euro to fall. And that's the main reason why there's a huge flight to the US dollar index. And it's another reason why when the US dollar index is going up, values of the broader equity markets tend to fall. And it's because of macro issues that kind of correlate with the euro, the US dollar index as well. And when you have the US dollar index have a reactionary movement to what's going on in Greece and the whole entire banking system out in Europe, it has an effect on US equities as well. And that's the main reason why JP Morgan and Chase also lost I believe it's $5 billion at this point in their recent bond trade, is because of what's going on in Europe right now, and that's what's causing people to buy the dollar and to buy US Treasury bonds. And when the value of US Treasury bonds go up, the more and more money JP Morgan and Chase is losing. So this is a huge macro event that's going on right now. And overall, so as long as people are unconfident in equities overall, so as long as the issues continue to roam and go on in Europe, it's going to cause the value of the dollar to continue to trend higher, even as the value of, and while the value of the dollar is continuing to trend higher, chances are the value of equities will struggle to make any gains, to make any headway. And another thing I want to keep in mind is that a lot of the rapid growth equities, such as the mobile space, the technology mobile smartphone space, is not growing as fast as people were expecting it to, at least according to what Qualcomm said in their recent guidance in regards to how many chip orders that they're going to get for their 4G LTE technology. So overall, the equity markets are having a hard time finding places to put their money. And another thing is that the European issues was also causing the dollar index to continue to rapidly trend higher. And of course, it's what's causing a reactionary movement in the equity markets. So again, I still believe the US dollar index will continue its upwards trend, and I believe that so as long as things continue to become more complicated in Europe, chances are it's a bad idea to invest into financial equities, and it's a very smart idea right now to be dollar cost averaging into stocks that are more defensive and non-cyclical. That does it for me for today, and I basically anticipate the value of the dollar to continue to go higher, at least over the short term.